What can you say about this, Charlie? I mean, this is a massive developing story if it proves to be substantiated. Do you have anything to add to this?
Well, I mean, it's going to obviously create political uncertainty, and that is going to feed back, presumably, into market volatility. Since, this could lead to, very big political changes.
Could this, if you're the central bank, put off the supposed interest rate hike in December? I know we're many steps ahead of that.
I suppose it could. I mean, at the end of the day, central banks try and look at the underlying economic fundamentals. But if there's some increase in volatility that's happening in the markets because of whether it's political uncertainty or something else, it may be something that just encourages a central bank to stay their hands a little bit and say, let's wait and see what happens. You don't want to be in the position that, say, you raise rates and then a month or two later you say, oh, we've got to cut them again because of how things have panned out. So it could make a little bit of difference at the margin. I don't think it changes the big picture that central banks are facing, because we've now moved into the early exit phase from the period of highly stimulatory monetary policies, and so central banks are just feeling their way, going cautiously, and I think that's the right thing to do. But assuming the recovery that we've seen in most of the advanced economies continues, you would expect to see some further increases in policy rates over time. But I would expect them to be pretty gradual.